Good morning, Paul Georgie from Allendale. It's May 9th, Wednesday morning, and the outside markets again are dominating the grains. We've got very strong dollar, up 35 as we speak. Crude oil is down 98. Gold is down about $20 as we speak here this morning. So that news in the weakness in the outside markets and the macro markets are coming out of the European community again. The Greece situation, the newly elected coalition leader there has said that the agreement with the EU is null and void, that it's not going to happen. So that's created a lot of concern, and it's just a matter of time is what the trade's expecting for Greece to be out of the European community. So that is a concern that's got traders very nervous and causing them to liquidate commodity positions and reduce size. And that's what we're seeing in the markets here this morning. We're seeing pressure in the corn, soybean markets ahead of the USDA report tomorrow morning. We've got a 7:30 report that probably is going to be a game changer in one way or another. The trade right now is expecting old crop corn to be a friendly number, new crop corn to be a bearish number, and beans to be pretty much supportive across the spectrum. The big influence of tomorrow's report will be the idea that we will get USDA numbers for 2012 and 2013 production. It'll be the first government numbers we get, and from those numbers analysts will be making projections and adjustments on planted acres, yield, and so forth as we go forward. So that number is going to be pretty important in where we go from this point. So that's traders will be evening up positions ahead of that. The other big thing that we've got going on in the grains here today is the May contract. The May contract goes off the board on Monday. This is the last trading day. Volume in that contract is light, and the shorts in that contract are being squeezed because of the tight cash positions. Basis in central Illinois is 60 over the July, which is going to put it, we're priced over the May as well, so the delivery possibilities are very small, and therefore the shorts in the May contract need to liquidate and need to be out of these positions and get out before Monday's close. So that we expect that contract to be extremely volatile here as we go into the Monday last trading day. Weather conditions throughout the Midwest seem to be near ideal. The crops that are in the ground have got moisture. They're growing. Temperatures should warm up as we get toward the end of the week, and the fields will dry out. Planting will be back on target, and we expect that we could see some pretty good planting progress again this week. Ukraine and Russia, they're expecting to get some rain here this week, anywhere from half to an inch in those dry areas. So that will be supportive to their wheat production, and something that's being watched very closely as that area is a concern about how dry it is. Livestock markets this morning, we've got cutout values yesterday, a little higher in beef, 34 higher in the choice, $1.31 higher in select. Pork cutouts were up 42. The biggest problem we've got there, even with a slight increase, is the feedlots are losing money now. The packers are in the black. When will that change? We expect that they may have to pay up this week, a little bit anyway, on cash cattle to get the supplies. The feedlot's still able to play hardball there and sell cattle, and hope to sell cattle at higher prices. The supply of meat is the biggest problem that we've got in the livestock industry right now. Our export demand is slowing down and drying up completely as China's pork production continues to increase. and pork prices there are continuing to go down. They've had 14 weeks straight where they've seen a decline in pork prices, and that relates to consumption here in the U.S. because we just don't have the export business and not able to clean up our meat inventory. So the hope is that we can get some good weekend weather here in the metropolitan areas of Chicago and New York, where cookouts become very easily done, and that's what we're waiting for. We hope that will help get some clearance at the retail counters, and in turn support this product, and in turn support cash prices. So looking for some help on the demand side in order to improve prices in the livestock. Also in the livestock, we've got the pressure from outside markets. That's keeping anybody that wants to try to be bullish in the hogs and cattle, keeping them underneath the foot here as outside markets continue to pressure prices. So stay in touch with Allendale's Research. We'll answer any questions you got. You can get in touch with us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.